Mortgage lender Housing Finance reported a 19% increase in full-year earnings, and joining us now in studio to unpack the results a little further is Frank Ireri. He's MD of Housing Finance. Frank, thanks so much for joining us this afternoon. If we get straight into the numbers, we've had pre-tax profit down 7% and total income cushioning the earnings per share. The jump that we've seen on that front. What does come as a little bit of a red light is the high cost of funding in the first half of the year, leading to gross non-performing loans up 48%. It's currently standing at 2.3 billion shillings. Just how worrying a factor is this for you right now?
Okay, I think first to comment on the cost of funding, that was definitely the biggest challenge in 2012. And as you correctly say, especially the first 6 months of the year, when the central bank rate was as high as 18%. That not only forced us to increase our interest rates, but also discouraged a lot of new borrowers from borrowing, and hence a reduction in our sales year on year. Mm-hmm. In terms of the non-performing loans, in fact, the bulk of that is actually what we'd call a timing difference, and attributed towards two changes in regulations that took place last year. One was implementation of the Land Act in May, which now actually gives borrowers more time in terms of foreclosures. So while the central bank requires us to provision after 90 days, borrowers have up to about 270 days to fight the case. The other was around the treatment of individuals who have multiple loans. Two of your loans may be performing, one is not performing, but you now have to treat them all as non-performing.
Mm-hmm. How are you mitigating against some of this risk this poses moving forward? Because yes, we've seen the Central Bank of Kenya easing its interest rates by 850 basis points to the current 9.5%, but you've still got a consumer that sits under pressure nevertheless.
Yes. What we've been doing, and actually started doing in 2010, and quite a bit in 2012, is around alternative sources of funding. The first being around our medium-term note that we floated in the market in the fourth quarter of last year, which is a 7-year fixed note. We have a fixed interest on it, and we can then lend fixed to our customers. The other is in offshore borrowing. And last year we had a facility from European Investment Bank, which is also fixed for 10 years, and one from Ghana International Bank. And 3 weeks ago we signed one with the IFC, also fixed.
Mm-hmm. Okay, so you've got the funding option there. You're also looking at a little bit more, of a diverse operation. You've got Housing Finance having introduced current account services in March last year, and that in a move to drive down the cost of deposits. So run us through that strategy and how that's been paying off over the past year.
Yeah, in fact, yes, while we did get the approval for the current accounts in March of last year, we actually launched towards the third quarter in terms of entering the clearinghouse. Now, in addition to funding, it's actually more also of a value add to our clients, especially our developers, mm-hmm. who are moving around a lot of money, paying their workers, paying for construction materials. And we were busy disbursing this money into other banks for all the years that we've been in business. So it is actually to retain it in-house, yes, help our funding, earn some fee income on it, but also provide a one-stop shop for our customers.
Outlook, Frank, for the company moving forward, where's your focus? Where does what forms part of your strategy?
Yes, the outlook, and we actually just through the first year of our 5-year strategy, 2012 to 2016, a very, very big focus of our strategy is around the supply side, in terms of using one of our subsidiaries to go into development, and we launched our first project last year in May. The other side is around joint ventures with landowners, both private and public. And the PPP, Public-Private Partnership Bill, has now been passed, and also starting to work with government on various supply initiatives. The other key focus will still also remain around funding. Funding is very critical for this business. So again, looking for long-term, stable, affordable funding to fuel the business.
Well, we have some that look towards the dividend as an indication of just how confident the business is about prospects moving forward. And in that regard, we've seen you declare a final dividend of 1 shilling 40. That's 17% up on last year. Frank, is that a dividend policy that you're looking to see remain intact?
Yes, it is. And we're still a very well capitalized company. And with our current capital and reserves, we're still able to double our balance sheets. So our current dividend policy, we do plan to continue with the years to come.